I don't think raising capital's easy for anyone. Who's it easy for?
Well, it depends how much capital you're trying to raise.
I mean, no, it just kind of depends on, because some people struggle to get $10,000.
That's true.
But, $1 million's gonna be a hard one.
Oh yeah, it's gonna be rough.
Honestly, I think we can get the first 10% of that within 1 week if we call everyone we know. But the problem is after we spend all of our resources, who are we going to contact then? We're just going to have to go contact, random people.
Mm-hmm. And it all comes down to marketing at that point.
Well, I mean, I guess, yeah, getting them familiar with us. But I don't know. That's definitely going to be the hardest part. They say you need to raise your first 30% of capital in the first 7 days, and then you get the last 30% in your final 7 days. So apparently, like, this middle part, just from what I read off of WeFunder, is going to be close to impossible.
Really?
Well, I think it's just going to be really dry.
Mm-hmm.
But yeah, raising capital,
Well, it's the most important thing in business. Honestly.
I mean, for us, it's going to be
for us especially
life-changing.
Because we can do as much.
Well, no, the business will fail if we don't raise enough money.
That's
in
the
this
thing. We could do as much as we can for the business. We could make as many documents, spend as many hours as possible, but it really just comes down to getting funding at the end.
Well, I think, yeah, it definitely comes down, yeah. But how do you get funding?
How do you get people to invest? See, you could get potential people by, like we're saying, running Facebook, Instagram, Google AdWords, stuff like that. It also comes down to salesmanship, and your company, honestly, because you're getting somebody to invest in yourself, not only your company.
How are we going to do it? This is our plan right now. We're going to get our Form C through the SEC. I'm pretty sure that's what it's called. And that's so we can crowdfund, equity crowdfund. So pretty much what happens is you go to WeFunder, you go to our WeFunder campaign, and you can click invest on it. Anyone can invest. Typically in a business like this, you have to be an accredited investor, which means you have to have a net worth of over $1 million, or you need to make, what is it?
$200,000.
Yeah, you need to make
in the last 2 years, or in a row.
Or you and your wife or your spouse,
Combined
you and your husband.
300,000.
Yeah. So we're setting it up pretty much. And now, if you go and invest in the stock market, what they do is, I think is that a Section A or Section A plus? Anyways, that's so anyone can do it, but it costs like $50,000 right out of the gate, just to get a lawyer to file for that and for the SEC to go look at. Anyways, this is just a lot easier method to crowdfund, and it's kind of new. I haven't really seen anyone, do the crowdfunding method in real estate. Anyways, yeah. So, crap. What were we talking about? Before raising capital, what we were gonna do. All right. So
that's how we're raising capital.
How we're raising that. That is the method. How we're doing it. That's the legal method we're doing it. And then we're going to use Facebook ads, or I guess first of all we're going to contact friends and family of people who would like to invest money. And so hopefully that'll be. I don't know. I feel like that might be the hardest part. Asking friends and family to invest, because there's always that risk there. But I think once
you don't want to mix family and business.
But I think that'll be, I think that's more the reason for it to be a successful company, is all the risk there, and knowing that you're responsible for the investments of some people in your family and your friends.
Exactly.
And I think it just looks better for people that are definitely outside investors and they don't really know too much about us, but they're interested in investing. And not only like just a real estate, in a real estate project, but in the affordable housing crisis project, which is one way I think we're a lot different than other companies. Is most other real estate companies, they're just trying to make as much money for the investor. Now that's something that we share, is we're also trying to make money for the investor, but we also have like a purpose to the business, which is solving the affordable housing crisis. Which, Dylan, I know you know some of the stats, right?
Oh God, unbelievable! Millions of people are paying 70% of their monthly income on rent. Okay, and the golden rule of taxes, people say, is they take about 1/3 of your income. So that 70% plus 1/3, which will say 33%, comes to 103%, which means people are just struggling to pay their rent every month and just struggling to live when it's the biggest problem in America housing-wise, and nobody's there to really fix it. Like we were talking about those big companies like, well, I don't want to use any names, but big commercial multifamily real estate companies, they're all going for the top 10% of Class A housing.
Let me tap in here. So for some of the actual figures on the affordable housing crisis, so there's I'm looking at the gap analysis. Now this is by, let me see if I can't see the actual, hold on, give me 1 second. The NLIHC, let me see what that stands for. Oh, Low Income Housing Coalition. They have some figures on their website. This is the gap analysis, and so there's cost burden, which is people that are spending 50% or more, or households that are spending 50% or more of their income on rent, and so it splits it up into different segments. So there's the extremely low income, there's very low income, middle income, and then above median income. So for the extremely low income, there's about I guess I would round up to 10 million cost burden households. So pretty much 10 million families are paying over 50% of their income on housing, and most of this is it's centralized in urban areas. Anyways, that's just some of the stats. But yeah, back if you wanted to explain the business model where I took off from you, how we're going to use the capital. So pretty much what we're raising right now is our goal is $1,070,000. And so that's because we fund are the kind of the third party we're using, and the main reason we're using it is just as a secure method, just to protect both parties, and plus to build a little bit of trust in between our company and our investors, so they know that, or so you would know that someone's not just taking your money and running, and you don't really know what's happening with it. I feel like that's happening in some situations, but with WeFunder in between us, you kind of know that someone's looking after the funds and doing background checks on us, and they're just looking into a lot of information on us. Anyways, how we're going to use that money is right off the bat, because WeFunders helped us out by filing some of these legal documents for us and saving a lot of money. I think they take like 5 to 7%. I'm not really sure what it was. We might negotiate that down. We'll have to call them on the phone and see what can happen. Anyways, but pretty much the money we're going to raise from this during our equity crowdfunding, most of that is going to go, or all of that, pretty much all of it, except for that 5 to 7%, is going to be going towards the down payment on our first affordable housing property. And so if you go look at our financials, we have our full business plan on the WeFunder campaign. We're going to put it on our website. To some investors, we actually sent a physical copy to you. But we're looking at apartment buildings that are around like $4 million in valuation, or $4 million that are appraised. So pretty much what happens is there's a lot of people that kind of have ridiculous numbers for their apartment buildings, and usually that's because they're valuing it off of the cap rate, which is pretty much like the rate of return. So a lot of people overvalue their apartments, but what we're looking at is, and what we're putting our bids in, are actual appraisals. So you can find an appraisal for any property by going to the county assessor's office or you can go online. Most of it's online, and it'll tell you the assessed value, or the value that they're paying taxes on for this property, and so that's the value we're bidding on. So we're looking at apartments or complexes that are valued at about $4 million, and so we know that that's a decent valuation. That's what they're paying taxes on. That's what's been the value that most people agree on. We're not talking about valuations that's just like whatever the owner says. We're actually looking at these valuations. Anyways, back on the topic. I digress. and I lost complete train of thought again. Anyways,
Going back to raising capital. So what we're doing with that money?
what we're doing is we're using that as the 20% down payment on that apartment, on that appraised apartment building. And so pretty much what that does is it leverages our money. And so we're able to buy, a bigger property than we typically would be. And then also a good thing about leverage is not only do you get to, buy a bigger property than the money you have, it is, first of all, your tenants pay down the leverage every month. So we're going to have an income coming from the property, and let's say, 50% of the net operating income goes to the actual, payment to pay down our debt and increase our equity in the property. But also for legal reasons,